Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's already happy to hump day, since we had Monday off. So it's the middle of the week, and what a market. The markets are just, boy, has never the options been more of an example of how markets move differently than what most of the books talk about. I think that's the clearest thing of all. Now this morning you can see here, look on J4X here, you can see the dollar Swiss pairs trade, which we like to look at nowadays to see where the dollar is going. Obviously the dollar is moving up with that pressure there. Now over here on the Chicago Quant, that's not a hinky-ashy bar, that's just a regular bar. So you can see there's just a little weakness, but what we can see right here is the strength coming in right there on our work. And that'll be joining in probably very soon right here. That'll be starting to jump right in there, and it'll start to show the strength. Now the only thing I can figure is I'm seeing a couple things occur at the same time. I'm seeing volatility increase in a market that's going up in value, which is not normal. So in other words, let me just show you real quick. We'll open it up. But what we're seeing is, let's close this one like so. Matter of fact, maybe I should do that is put that in there afterwards. So I'll go like this. I will close this like so. Open this one up like so. And I want to show you the volatility because that is the engine that runs everything. I know a lot of people try to steer clear of it solely because they don't understand volatility. And that has something to do with options, and I know that freaks people out. And they've created binaries, which is binaries. People get nervous about them too. And all it is an option spread. The binary is just an option spread, nothing more. But you can see here, yesterday's volatility index has moved up somewhat aggressively, no less. So let me make a copy of that, copy that window. And then we're going to close that. And we're going to put it over here so we can look at it a little bit more comfortably. And that is really what's going on here is we're seeing some action kick in. Oh, let me put up the chat line. I haven't got to the chat line yet. Let me do that. Sorry about that, traders. My mind is set on this instead. Trading. There we go. And so my mind is set on what is going on here. Why are we seeing that increased volatility when the markets are so happy going up, up, up and away? And that is probably what's going on there, is that we are seeing that that pressure, that money is getting nervous. That's usually what happens. Money gets nervous, and what volatility does, the volatility is a representation of insurance or hedge, however you want to describe it. So that's where we're at the moment. Now let's go over to the currency market again, and because like I said, it's something's going on here. You can see the dollar is trying to be firm. We see this, and one of the strangest things always is that when the world goes into some type of tizzy, they, even if it's initiated from the U.S. and the Federal Reserve, somehow or another they buy here. Yeah, I know. It's like you would think they would run like with their hair on fire, but no, they go and buy dollars, they buy bonds. So that's what's catching my eye this morning, is that. Now, let's use another example here, and that is right here, look at the bonds. I mean, we're supposed to have inflation, right? Everybody's seeing prices, and as you can see the last couple days, look at the bonds. When bond prices like this, it's 62 and change there, or 63 and change now. When the price of a bond goes up, the interest rate drops, okay? Because you're trying to lock in that interest rate. When you buy that, you're locking in your interest rate. So obviously as interest rates are going down, the bonds rise in price, demand. So, and we've been in a weekly buy for a while now. Where's it on the fact check spreadsheet? I don't think we do a 30 year. We just do the 10 year instead. So it's 5 weeks in a weekly buy in the 10 year, and in the 30 year it's basically something like that too. I think, matter of fact, I think it's even longer. but it just goes on and on and on. Matter of fact, I think I have the pink line where it started, or the green line. There it is. So this went into a weekly buy back on May 17th. So that's June 17th, and now we're heading for July 17th next week. So we're looking at 2 full months. This thing's been in a weekly buy. This thing is 7 weeks in a weekly buy here. It just keeps on rolling. That's a flight to safety, because if inflation is kicking up and there's uncertainty in the marketplace, and the marketplace is such a broad community now. You know, the currencies are one of the, bonds are number one, currencies are number two, and then the commodities in the sense of oil is number three, and then it drops much lower down in volume to gold and silver and soybeans, wheat, corn, anything denominated in dollars. And then from there, the stock market's just a little teeny weeny little thing compared to the rest of these things, especially currencies. Currencies are a major, major product, and because they have a value. To transact from one country to another, you need their currency. So that is the strength that we're seeing here, and now we're seeing the volatility kick up in the stock market, which is such a small little product that we're starting to see a little concern. Money is becoming concerned now. They can hedge themselves through the binaries and the options. That's insurance. Just like when someone drives an automobile, you have an insurance on your automobile, or you own a property, it's a house or something like that, or a factory, or rent an apartment, you have insurance. Well, the same thing is what options are. They're the insurance. So a lot of articles, let's go back to the currencies here, but a lot of the articles written over the decades and talked about are old ideas pre-1976, before there was a listed options market. Listed options had been illegalized like in 1839 or something like that. So what happened was people were writing call options and selling put options. Back in 1839, there were no computers, and then they were disappearing, taking the premium and going. So they just made them illegal until the beginning of computerization in 1975, 76. Computers were becoming much more, usable. They were around to be used. Accounts were being tracked more. So what they were able to do is they were able to legalize options. And by doing so, it opened the doorway to incredible amounts of volume. Now, when I was young, and I was a member at the New York Stock Exchange, the old guys used to say, they'd be looking at the building as we were walking up to it. We'd all get off the trains and so forth, and we were walking up to the building, and they'd go like, "Can you imagine? I made more money when we traded 7 million shares a day. Now we're trading 70 million shares a day, and we're making less money." And then they look at me and they go, "You option guys." And that was it. Back then when someone said, "Let your profits run," a stock moved 50 cents in a year. Now, it goes 50 cents in a minute. Okay? And so that is really what confuses people and gets people in trouble, is they keep on hearing these odd ideas of like cannonballing up. In other words, you buy high, buy higher, run, let your profits run, be part of the momentum, and it's not. It's a dead end, because with increased volatility, you could go up for 6-7 days. You keep on getting long. Now your average is way, way up, and the next thing you know is it drops halfway down where you started, and you're down a big chunk of money instead of being still in the profit. And that's what the problem is that people don't understand the volatility. And why don't they understand the volatility? Because they're afraid of understanding the options and the binaries. And so what it does is it makes it very hard for people to appreciate the modern market. I used to lecture people about what they called the modern markets and how they work. And what it comes down to is that modern markets are when, before 1976 and the listed options universe started, markets moved in very small increments. And obviously we had Bretton Woods had just been broken up in the currency market, so currencies were starting to get wild. And so that was a part of it. But at least the currency market has more integrity and structure because there's real value there. People need to buy British pounds if they want to buy something from British Aerospace. You want to buy something from the Eurobus airplane, you got to buy euros. If you want to buy something from Siemens in Europe, you got to buy euros. Back then it was Deutschmarks. And so there's an actual market, there's some value. Good morning, Alan. How you doing? Dollar yen is a yo-yo and bonds are flattening. I don't know about bonds flattening, but the thing that's freaking me out is look at this action in the bonds this morning and yesterday. Let me go. There's the volatility, but let me just go to the bonds again because they're not flattening out. They're on a mad dash to the moon. I mean, look at that stuff here. Now, yen is just, doing its back and fill. I think we're in a weekly buy in there too, aren't we? That's what, line, where is that at? Line 19, 7 weeks in a buy, 2 days in a sell. Okay, we'll highlight that right there. See that on line 19 on the fact check spreadsheet? And let's take a look at it here. There you go. Now, it is backing off for the last couple of days. This is the third day in the sell and it's moving down. You can see the white line had broken through here. Let's see what it looks like on J4X. Right there. And you can see on the weekly on the Chicago Quant right there, it's still holding up very strong. And you can see here it's broken down just like ours is broken down. But I wouldn't say bond yields are flattening. They're getting a little confusing to me altogether when we have, what do you call it, transitory inflation. Is that what they're calling it now? Like as if you're waiting for the next train or bus transit? Crazy stuff. And so in an era where volatility is so much more dramatic, now stock moves $10 in a day. It used to move 50 cents in a year before the options market. And so it makes it a lot tougher. Now, I remember when there were 800 and 700 yen to the dollar. I remember trading that. I remember when it fell to 600, 500. I was like, wow, now we're down to 100. Yeah, I remember going on a camping trip and that Friday just shaking my head going, my God, they've moved down to 600 in the yen. And we were, I think I was in a Subaru or something like that. And I was thinking, how much is this car becoming more expensive? No, that's Australia, right? Subaru? Or is it made in Japan, but it has the engineering of Australia or something like that? So, yeah, that's what we're going through right now, and what's really got me a tad more confused this morning. I don't know if the right word is confused, but you can see the volatility is starting to perk their head up there like that. In fact, let's see what oil. There is what is that? That is coffee. Let's see what the coffee's doing. Let's do a control R and see if it updated. Not yet. And one of the things that caught my eye is this tags that does the three grains and the sugar, and that's doing the same thing. It's moving down. It never got into the weekly buy, whereas last week, as you can see on fact check, corn, deck corn, and November beans got into daily buys, and now they're right back again into weekly buys, and they're right back into the sells again. So the markets are starting to become even more volatile. And how can they not when you look up and you see something like this, where you see the 30-year bond almost 7 weeks in a buy, and it's just being as tenacious as it can be, on the upside. And at the same time, we're seeing the volatility starting to increase. And I bet the currency, when I was young and I traded currencies, The volatility in currency is usually stepped up a day early. See, not there. And there it is. There's right there. There's the VIX. And so you can see the VIX showing some life in there yesterday. Let's see if they have that again today. All right, let's jump over to the euro and see what's going on there. There's the euro. Euro is still showing that weakness. It's been in a sell since, I guess it's right here. Right there. There it is. Right there. Let's see what it was there. Yeah, that was it, right there. Matter of fact, it looks like that's where the weakness kicked in. And then the daily buy it kicked in here. But we're in that weekly sell, so you can't really try to take longs, you just try to not be short, that's all. So it's that neutral thing. And then it goes back into the sell, you can get short again. And that's where the euro is right now. It's starting to feel that issue. Saw a strange headline. Where is that? Let me just say what the headline was. I thought it was very interesting. It was in Zero Hedge, and it says, No one tell the Germans. And it says, EC power play is for all the marbles. So now I guess what is it? What's the ECB muscling on the Germans? I don't know. Global stock markets seem to be living the dream, but under the surface there are some serious concerns in Europa. The ECB makes its power play this week to confirm its place within the political trinity of states, the European Union and the ECB, by effectively handing itself control of fiscal and industrial policy levers that could power up Europe. No one tell the Germans. So I guess Germany's not happy about the idea. Fascinating numbers coming out of the U.S. and about the must be 28 billion of new money that pumped up the stock market in June. Read all about it in the Wall Street Journal. Retail investors power the trading wave with record cash flows. Okay, where's Europe in this? Okay, so only 44% of professional fund managers share the retail bullish view. They are far more concerned about the way in which certain tech stock movement look very 2000.com crash. I'll tell you this, with the Federal Reserve in there, awful hard for it to crash, that's for sure. And then let's see, what are they saying? Christine Lagarde. Okay, now this is where it's more currency related. The ECB's growing council will sit down in Finsplatz, Frankfurt, later this week to discuss and approve President Christine Lagarde's grand plan, an all-encompassing strategic policy rejigged of its remit. I don't know what the hell that means. The first review in nearly 20 years. It's the usual European thing, an opportunity for the 25 voting and vetoing members to trade naked and not so naked domestic self-interest and political advancement versus the objective of the I guess it's the Euro political structure, bureaucracy in Brussels. Christine Lagarde has proved herself an effective leader in the financial institutions, but she is not a classic central banker. She is very much part of the French political masterclass. Wow. I mean, is this going to be like a movie one day or what? I mean, there's just all kinds of, now it goes all about, it's very un-German approach. The Germans, as we all know, fear nothing but tremble at inflation above 2%. See, that's what it comes down to. That's why the Federal Reserve here is trying to tell us that it's transitory. Whereas, let's see, Bundesbank chair or chief Jens Wiedmann is earnestly dull and boring, warning about inflation and bond buying dangers, while the new crop of German politicians are all trying to attach themselves to demands Europe reverts back to strong enforcement of debt GDP rules. The rest of the Europe is resoundingly looking the other direction. Everyone promises to consider. I bet that what the problem is. The Fed is behind all this in the end. and because they're just printing money left and right, and then does the opposite because they know that the Germans will complain but will never act for fear of discovering how unpopular they remain in Europe for the crime of bring wealthy and successfulness. I guess so. I didn't know the Germans do that. Lagarde's plan is to boost the ECB's political relevancy by effectively placing it in the center of European climate change policy. Yeah, of course, because climate change is a fake out to begin with. All right, so this is what it really comes down to, and the end result is that the socialists, just like how they're doing, like that stuff in China, they're just, that's it. And so what we're watching here is when we see bonds go roaring up, that's the central banks abusing them, because the money managers are not reaching in there and buying bonds like that. I mean, that to me is an explosion. Look at that. That's an explosion. How can the 30-year now be down to like 134? I mean, it's insane. So the nice part out of the currency markets, this is me. The nice part about trading the currency markets are they're like the most legitimate market on the planet now. You can see that they go steady and sideways, and they follow the math nicely. They do this and they do that. You go into buy, there's usually upward strength, and you go into sell, there's usually downward weakness. I mean, that's the action we see now in the currency markets. Whereas in the rest of the markets, there's a scratch your head, I don't understand type of attitude. And so that's where we are. I just think it's a warning. I want everybody to know we're seeing a warning like I warned before when we saw craziness coming. So traders, don't be so brave about just being long and long without a stop loss in there. Don't be the last getting out of the boat, because usually that means it's on the bottom of the ocean. All right, let's take a look at, we saw the euro. You see the euro's moving down. We see now the cable is sideways at best. I mean, that's where it's at. It's trying to slip into a sell. It went into a buy a couple days ago. You can see, but we're all in the weekly sells at this point. Money is moving towards the dollar. That's sometimes a warning sign, not a, oh joy, there's the best investment in the world, but more like, oh hell, let's run for it. And that's usually the way it really plays out in the end. Now you can see here Turkish lira, incredibly sideways underneath the little yellow dots, where we think that it wanted to run up to and stall, and it has. You can see it's in a daily sell for a 2, 4, 5, a 6th day now we're on the sell, but at the same time we're in a weekly buy. Now the true indicator I like about the Turkish lira is looking at it against the euro. Euro, same situation, been in a daily sell, going on a 6th day, and this is flirting with its weekly sell. So I don't know if that means euro money is going to come in and try to prop this up. I don't understand where they kind of connote what Turkey is. One moment it's a ally to Europe, the next moment it's an enemy to Europe. It flip-flops back and forth. Just shows you how uncertain things are and how scary some of us can see it. And it does shake us up. All right, let's see if we can check the chat line again, because I've got Lagarde up there still yakking away. All right, so now let's jump over to, I don't know, let's see, let's go to the Canadian dollar. There's the Canadian on J4X. We'll throw it up on the Chicago quant right there. And you can see it's trying to turn its head back up again. It went into the daily buy there yesterday, right there. You see it on the fact check spreadsheet, line 20. So we're 4 weeks in a buy, and we're 1 day in a buy, going on a 2nd day. And obviously they're selling it off a little bit in there. Someone's taking some profits. Not everybody tries to cannonball up. And it's been in that weekly buy now for 4 solid weeks, trying a 5th with no problem whatsoever. All right, what else do we look at here? Then let's jump over to, let's see, from there we usually go and take a look at oil and gold and so forth. So let's do that, and then we'll come back to the South African Rand. So let's take a look at oil. Oil, I think, slid into, or is it in a sell? Yeah, it's been in a sell. That's right. That's right. It's doing the goofiness. So we're in a weekly buy, and they're trying to knock it down as it rises. So obviously there's demand. And you can see they've brought it back down to where it went into the sell. It just can't get going until, if anybody wants that $100 oil, well, you got to wait for the daily to turn up. And then you can see the weekly doesn't seem to want to really break down too bad. It's holding on pretty firm. Obviously, we're at the high end of a range. I mean, you don't really want to try to buy stuff that's at high ends of ranges. Like you can see here, when it starts to dip, you get your little dip there. And then, here it runs up. We're getting our little dip now. Maybe this time when it gets into, starts to move up, we'll have a daily buy with the weekly buy, and then we'll see some real action on the upside. And then we take a look at gold. You see gold pushed itself into a sell by the hair of its chinny chin yesterday, and you can see today, let's give it a refresh. Did I do that right? No, I didn't do that right. Let's try it that way. There we are. Now what happened there? Well, I blew that one up, didn't I? By doing that. Let's delete all those. There you go. And so what was that? The Canadians, what, 4 weeks in the buy? I guess that's what it is, 4. And 1 day in the sell. There we are. And we'll just leave it like that. There we go. And so you can see here the gold is trying to perk up a little bit from the selling of yesterday. They want to own it because I guess more than anything else is they see that transitory inflation may not be so transitory. Same thing here with the silver. They're trying to lift it up. Not doing the worst job. They're not just doing... Can't get these weeklies to go. That's what the problem is. And the central banks are the most powerful of the traders of this stuff. So what happens is that the public and the funds can't exactly march into these products because they make it very uncomfortable for them to do so, since they're giving them so much money for free to trade overnight. That's what happens. The Federal Reserve, to keep everybody in line, they give, even from Citadel, one of the biggest hedge funds in the world, they give them money overnight for free to make them stay in line. In other words, don't step out of the strategy. Be patriotic. Be a socialist. And so that's what it comes down to. And that's where we're seeing this now. And so you can see here silver is trying to lift up. That's probably just like the average little buyer who's not getting your $250 million worth of overnight money for free. And then, let's see, so you can see that. So now what we'll do is we're going to jump back to the currencies unless someone wants to see something, the way Alan wanted to see the yen. And we'll take a look at the South African rand right there. That's usually something we like to look at when we look at the metals. In this case here, you can see it's been trying to be weak. When it's going down, it's gaining value because it's against the dollar, and at the same time, usually gold is going up in value, because that's one of their big exports. But in this case here, it's just going all sideways on us. We got that crazy sideways thing we had going on in all those other products now. We're going into this sideways chop. I think we'll put a block there. And you can see it's trying to go up, and you would assume that meant that if the South African rand is losing money, then you would assume that gold and silver are going down in value. And that's what we're seeing there now. All right. Then let's drift over to the ruble. Ruble, they've already done a preemptive strike on the interest rates. They don't see it as transitory at all. And they're moving things back up, and you can see we are flirting with a weekly buy, and we've been in a daily buy since here. Put that in there. There we go. Oh, wrong spot. Let's put it down here. So there's the weekly buy there. Oh, so we can get rid of this. There we are. Overall, the ruble didn't go far. We talked about that, how the ruble went into the sell up in the 75, 76 area. Let's see if we can find it there. There it is. Right here. So it went into the sell here this week, and it did drive down, but it only went 4 full handles, maybe 4.5 tops, something like that. And you can see it would slide into a buy every so often, like right there. It couldn't do it, so it went into this long slide all the way down to right here. Went into the buy there. It was a real solid trend. And then slid back into the sell there again, with it in the weekly sell. And then now it's jumped back into the buy. It has some nice, once in a while you get a little shift out of this, but it's a very consistent, has steady momentum, the ruble against the dollar. All right, I think we looked at the yen. That was with Alan. So now what we do is usually we do that, and then where do we go from there? I think we looked at the Canadian. Did we look at the Canadian? Yeah, we did. We looked at the Canadian. And let's see. Oh, Mexican peso. That's it. We go to the Mexican peso, and from there we'll jump over to more commodities. So there's the Mexican peso. And there it is right there. And you can see the attempt to go back into the weekly. You can see the daily went into a daily buy there yesterday. It's not helping it too much today, but it's telling us that there's some volatility coming at the same time. And then it did it there too. And we dropped it back into the sell here. And that's been a really poor sell. There's that 8.5 out of 10. So once this thing gets into a weekly buy and a daily buy, you got yourself some upside potential there, which is kind of sad because they've been doing really well. You can see the peso had been on a nice long run from the 20.5 area all the way down to the mid-19s, something like that. And then it went into a buy for a week, and you had some strength, and it went back in that sell, and then it did this wild shift where it missed the weekly buy right there, went into the weekly buy right here at the top of the action. The daily kept you totally, in this case, 100% safe, which was very nice of it. So it went into the buy right here, and so you couldn't be short even with it in a weekly sell, because why? We're in a daily buy. And it did that mad rush up. Then it goes into the sell here, and then it starts to give you the chance to get short, and it only gives you very little win right there. Not like the big feast that it gave you here, and on the daily that is. And then now you can see we are jumping back and forth, so obviously there's a change coming. That's what the Mexican peso is trying to tell us, there's a change coming. They may be reading the tea leaves, what's going on here with this bond situation. And now we see, as I said, we're seeing the stock indices, or not stock, the VIX. Okay, there you go. There's the VIX now showing life. Isn't that interesting? Look at that. It's trying to push underneath today. See, we're in that weekly sell. We need this to perk up. We need the green line to go to the zero line, and we need the histogram to get there, because this is a 3.5 because of the volatility in it, the beta. And so we need that to start turning up, and it's not happening at the moment. We'll see what they do with that. All right, let's go over to the commodities again, unless anybody wants to see a particular currency pair, and then we'll go take a look at that. It's a quiet day, isn't it? Wednesday. Everybody's kind of quiet there. Let's see. Right. Let's see. Stock indices. NASDAQ running through the roof again. Just another march up. Like as if it's just all free money, and that's what it probably is too. Now, what's curious is you can see that the S&P is trying to lift up, and it is. It's firmer today. And then what was really curious is that we pushed ourselves into a daily sell on the Dow Jones Industrial Average, and you can see we've been in a weekly sell for 2, 3, 4, going on the 5th week. Something's brewing there, where the Dow seems to have, and it looks like a reverse head and shoulders on some level. If it wasn't for that peak there, this would be a great reverse head and shoulders. I think they have there's an old technical analysis thing where the head doesn't break the neckline. I forget what that means. I might have to look that up, but there's an old technical analysis. I'll have to go after the John Murphy book. John Murphy's is the best technical book out there. I don't have one. I've never had one. I've always threatened to buy one. But John Murphy was on the FNN, which was merged with CNBC. That's the days when I used to do the Guru Review on TV with John Bollinger. And John Murphy would talk about a failed neckline once in a while. And matter of fact, I think I'm going to look that up right now and see if we can find something about it, because it's rare to see a failed neckline. John Murphy. I'm doing that on the wrong machine. Let's try it here. Escape. There we are. I wonder what that says. Let's see. John Murphy. He was an old E.F. Hutton guy. Big technical analysis guy. Very successful. When technical analysis was considered, they used to call it voodoo. Yeah, they used to call it voodoo. Failed neck line. Let's see. John Murphy's Patterns and Recognition of Metastock, 2005. John Murphy, The Origins of Visual Investing. That's what they used to refer to technical analysis. Huh. Technical analysis. Let's see, failed neckline. Let's see if we can find the failed neckline. The neckline of the head. Okay, here we go. Chart pattern recognition, Metastock, Metastock Pro. If the next rally fails to rise above the previous peak, then we have the makings of a, come on, tell me the rest of it. Makings of a, they stop right there. Makings of a what? Let's see. Wouldn't you know it, they do that to make me scroll through a bunch of advertisement. All right. We will go after this a little bit later, but I think that it's something worth tuning into tomorrow. I'm gonna investigate this after the webinar is over with. I want, because it's rare to see a failed neckline, and this is the Dow Jones Industrial Average. So what's happened is that the two shoulders are higher, and the failed neckline, there must be something there. Testing chat line. Let's see, it's working again. Ah, okay. What happened? The chat line die? Ah, okay. I was wondering why it was quiet. Thank you, Alan. I'm just going to keep on. Let's see. Maybe this is it right there. Failed neckline. Maybe I should just Google failed neckline of Head and Shoulders and see what that says. And then maybe they'll fall back to, John Murphy. Line of head and shoulders. Let's see what that says. Failed neckline of Head and Shoulders. Complex failed inverse head shoulders. Let's see, Head and Shoulders failure. Okay, here, let's see what that says. Every week, tech charts, blah, blah, Head Shoulders failure. Head and Shoulders is a reliable reversal chart pattern that forms after an advance or a decline, and the completion of the formation suggests a reversal of the existing trend. Global equity market report focuses mainly on the chart patterns. Okay. As in the case with different classical chart patterns, Head and Shoulders reversals can fall or fail. However, the failure of this specific reversal chart pattern can be more informative than other classical pattern failures. Both the failure of the Head and Shoulder after a confirmed breakdown of the neckline or failure without completing the chart pattern is a decisive breakout. Would invalidate the earlier interpretation. All right, we'll work on that. because they're not showing us the failure. See, I'm going to keep on scrolling. Because that's what it looks like to me. Is it's something? It's like the three peaks in a dome. There used to be another pattern traders used to look for. Three peaks in a dome. $3 billion option for yen. Watch the institutional buyers. Oh, is that what the open interest is at the strike price? I think that's how Alan does that. What they do is how they decide if there's how much money is in something is they look at the open interest of the options at the strike price, or in other words, let's go to the yen for a second here. Matter of fact, that's what some of these boxes are. Is basically they're in some aspect they are a failed head and shoulders. You know, these boxes I was putting up, what they were is they looked like bottoms. Now here is there's the Mexican peso. Now let's try the yen again. So the yen, he's looking at, or one of the above, is looking at the 110 strike price, or the 111 strike price. Where you see how this thing is trading at 110.60, might be the 110.50 strike price, and there's a lot of open interest there. And they look at the open interest, and then they can figure out how much money that is. In this case, Alan, he's taken the amount of open interest and put it together. Thank you, Middle Age, and good morning. Let's see, I trade head and shoulder failures as when it fails to break the neckline and then turns up and breaks through the right shoulder going upwards. Made a lot of money on the pattern over the years. Yeah, right, I hear you. It's like another leg up, exactly. Now, how do you interpret this one? This is what's got my eye. Three things are really starting to bother me more than anything else. First of all, let's go to, see, where was it? The head and shoulder. Here it looks to me like a failed head and shoulder. Here is one shoulder, there is the head, and doesn't take out that high, and now this is taking out that high. Okay, so it's like a failed neckline. Okay, that's what John Murphy used to talk about. Then, this is bothering me. Right here, the 30-year bond. Look at the way they're just buying this thing like as if it's for free. Probably is for free. And then, the third thing that's starting to bother me is this. And I left this up for you. And that is the VIX. The VIX went into a daily buy yesterday. Now it's flirting and dancing a little bit. We'll see how that does today, if it can hold up in that daily buy. But those three things are giving me the heebie-jeebies. Okay? Now let's just take a look since you're here. There is the coffee this morning. They're trying to pop it up a little bit. And it's been in that daily sell for this little action here. And the weekly has done some damage, but nothing too damaging at the moment. Now I really like how tags showed us that when they went into the weekly buy last week, it could not get there. I thought that was interesting. And sure enough, they clocked the daylights out of all the grains. This tag is a really good, interesting insight. And so you can see on Fact Check, the November beans, deck corn, and the November beans, they went into weekly buys, whereas wheat in September stayed in the sell. Yeah, I can imagine. That's why I had, I asked Robin to send a live update to you yesterday after the markets opened. So that these things are all starting to give me the warning light. I see the little yellow light spinning around right now. I'm like, what am I looking? What is the warning here? And then I read the Christine Lagarde thing for the European Union today. And that's even crazier. She's trying to hoodwink the Germans into accepting inflation. They really get antsy about inflation. They had that state-sponsored terrorism back in the 30s from it, and they really they're terrified of what could happen. They don't want to open that box up. So, and in an era of irresponsibility, central banks and I was saying to Robin last night, one of the problems is that with the exchanges now all electronic, and you don't have hundreds and hundreds and hundreds of trading members anymore. No one is communicating with these politicians anymore, and the politicians are running wild. And that's they've removed the influence of the marketplace from economic decisions, and so now they're just flooding the world markets with cash. Something's definitely wrong with that whole thing. Something's definitely wrong. Something is not, it's not good, you know. So yeah, that's where it's at. And then Alan said that the chat line wasn't working. If you, middle-aged, see anything on a failed neckline, let us know. Let's see, Jolt's jobs opening playing havoc, as well as the gamblers are out in full. Yeah, I don't doubt it. You know, one of the things that really drives me crazy is people averaging up. I really hate when people average up. It's a recipe for disaster. The idea is you buy low, sell high. Sell it high, buy it back cheaper. But to buy it and then buy it higher and then buy it higher, they call that cannonballing. And you know, cannonballs are not really good for you. And so it's not a good thing. And that's really, oh, thank you, Middle Age. I appreciate that. I'm going to look after the webinar's over with, because I think that, I remember John Murphy talking about it once in a while, back in the 80s. You know, I remember that. You know, it's definitely something to be be aware of. Failed Head and Shoulders neckline. With the central banks and quantitative easing, you know, when you look at the currencies and the world markets in general, you know, it really keeps, they try to keep everything in line, they try to keep everything steady, they're trying to keep things consistent. And it really makes the markets crazy. You know, look at that. That's the S&P 500, going from basically the 415 area to the 433 area. And, you know, there's no respect for earnings now. Let's see. There's the DAX. And DAX is showing some weakness today in the ETF. Right there. Now that's yesterday. That's yesterday. Closed in a daily sell. It's in that weekly sell for 4 weeks. Or 3 full weeks going on a 4th week. Yeah, there's a lot of warning signs out there. I'm just disturbed by all of it. And lack of respect. You see the dollar. Oh, look at that today. The dollar is trying to sell down a little bit. And you can see the weekly's pressing in right here. I'm just nervous about the idea that the markets keep on going higher and higher and higher. Let's see what Coin is doing. There's Coin. That's the Coinbase, the stock, the bank for cryptocurrencies. And there is strength in it today. Matter of fact, I saw Bitcoin trying to get into a daily buy. So let me show you that. Right there. See, it's trying to perk up a little bit in here. Right there. But it's in a weekly sell still for, what is it, 12 weeks now? Something like that. 13 weeks in a weekly sell. You can see it's still underneath the zero line. These month-to-month contracts, they need a consistent contract, like an ongoing one that doesn't stop, because they last 30 days and gone. Let's see, the gold market. Yeah, let's go to gold. Gold and silver weekly quants move up. Any? Yeah, you can see here they're just, you know, they went into a daily sell yesterday. They're lifting up a little bit today, and you can see here the weekly looks even worse now. Central banks are keeping these things on their back. Now silver looked like they were trying to get this thing to turn up in some way. Not today, of course, not even this week with the way it's looking, but at least it was starting to curve on the upside. We're not getting any good signals out of these metals markets. Well, we are getting good signals. It's telling us to be short. And look, it started off telling us to be short around $28.5 on the silver. And here we are trading at 26. So yeah, I mean, our math is doing all right. Same thing with the gold. I mean, gold got us into the weekly sell right in here in the 1850-ish area. That confirmed week right there. And, gave us a daily sell here. No, that's not right. Oh, this is the August contract. Okay. Yeah, so there's the daily sell right there. So, it's that was less successful because it's really not gone anywhere. Made new lows after like 6-7 days. But then we've gotten back into a buy here, but we're not getting into a buy. Could there be another shoe on the downside? Can they really take gold down into the 16s and 17s? It's so hard to believe in these crazy times, but they control the game. Middle Age says, dang, the weekly looks bad. I know. I mean, can they really take this stuff? Could we really see $23 silver? $24 silver? Silver should be $70 with the way the crazy that's going on right now. And they got this thing trading so low. And gold should be $3,000 to $5,000 easily. With all the nuts going, with all the odd, foolish policies we see going on, these prices just don't justify. That's why it's so nice to trade the currencies, because at least the currencies have some rationale. They may be locked in ranges, the currencies, but they seem to have, look at the distance sometimes between the buys and the sells. I mean, look at this, the buy here, let's just make these things longer, that's all. I mean, it was in a buy for there. At least they go on good trends. And then that next day it went into a sell, and then what did it do? It goes right back into a buy again for a couple of days for a liftoff. Same thing there. And same thing here. And then this sell here a couple of days ago is so much more comfortable compared to watching them in these other products right there. So let's make that long also like that. There we go. So that's the action we're really seeing, is that the currency markets are like the cleanest of the markets. It's we're a currency webinar. It's a good reason to be a currency webinar and a currency trader. It's where it's at, really, in the end result. All right, what else do we got to look at here today? What have we missed? And we looked at some of the stuff. Oh, here's one. What caught my eye yesterday when I saw that the Dow Jones Industrial Average was heading down. Right there. The first thing I did is I went and looked at. I know where S&Ps and NASDAQ are. So then I went and looked at the Russell, because, the most speculative index of them all. And look at the smash they put into that yesterday. So you can see it's in a weekly sell now, going on a second week. It's been in a daily sell since here. So they're putting some pressure on. Right there. Let's put that in also, like right there. So the speculative money is moving a little away from it. Now, obviously, I would be much more appreciating of it if we saw it break, say, 21, made new lows. Notice of late, since March, it's making new highs, higher lows. Now, it did it there and tried to come back and failed. So higher low, see, this one was a lower low. And then it started to dig its heels in and start to make higher highs and higher lows. And now the question mark is, does this break this here and we bring it down? Is that part of the warning sign for, the way we're seeing the action? Let's see. Alan says, Doc, I'm witnessing a beautiful liquidity in the dollar-yen classic Goldman Sachs fundraising. Oh, are they? Is that what they're doing? Is they're floating something over in Japan? Is that what that is? Let's see. Goldman Sachs went into a daily sell yesterday. they were in a weekly buy, I think, for like 27, 28 weeks, or they're still in a weekly buy. I don't know, something like that. There it is. Yeah, they were in a weekly buy up to here. It was like over half a year. Something like right there. Went into the weekly buy here in the $200 area and stayed in a weekly buy all the way up until right there. So from July of last year, oh wait a minute, I think it did go into a sell here once. Yeah, it went into the sell there once and then went right back into the weekly buy. And then they topped it out after about 6, 7 more weeks. And now they're in the weekly sell. And you can see they're trying to flirt with it, but the white line is below and the green is below. So is this going to be an A and a B and a C and come challenge this, what is that, the 320s area? So if, let's say, oh, there you go. Middle Age says, Doc, did the no beans weekly go down yesterday? Yeah, it did. Here, I'll show you. Let me do this. Cancel. Let me close that. That's interesting, Alan. Very interesting. Let me just show Middle Age the beans, and then I want to go back to you on the yen. Now there's okay, yeah. So that's it right there. So, and I'm going to close this one too. No, it's doing its thing still. There we go. Let me just close this. Now let's look at the beans again. Here is the November beans now. They're the front month. And that started off right off on Tuesday morning. Right off. You know, they started driving that thing down. You know, it opened up relatively passive, and it just drove it. Look at that weekly. That's something. Okay, now let's go back to Alan and see the yen again. Let's go back to the yen. So Alan says, I'm watching how they are managing the yen-dollar pair killed all the long and short positions within the same hour. Whoa, oh, you mean on a short-term basis? Want me to put a short-term chart up, like a 15-minute chart? Let's take a look at that. Let's see if we can do this. Where am I at here? Let's do it this way. There it is. And we'll take this one. Yeah. File copy. And then file paste. Make it the whole screen. Let's put the yen in there. Format. Cash. Yen. Let's see, where's that? JUSD. Oh, wrong board. Escape. USD. There we go. And let's do this too. Let's put it in as like a 15 minutes so we get a good update fast out of it. Wrong board again. Escape. 15-minute. Okay, let's add a day or two to it. There we go. Now let's bring this up on the board here for you. Let's widen that up. Okay. Remember, I measure incredibly small movements in these products, so there we are. And so there, okay, I see what you're saying. So this is a 15-minute chart, and they took it down in an hour. Oh, I see what you're saying. So in 1 hour, they drove it down from like 70s, 70, 80-ish, 70s, let's put it that way, down to the 50s, and then took it back up another hour, right back up to it again. I see what you're saying. Yeah, I agree with you on that staying on the sidelines thing. Something's brewing here. There's no doubt about that. All right, we're going to get out of here. This is Doc from North America. Remember, traders, stop losses. Try to be neutral more. Things are getting weirder and weirder every day. No idea what's going to happen. All we can do is follow the math, and the math is trying to tell us things are getting weird. What was it? What was that writer? Thompson. He used to say, when things get weird, something like the crazies get pro, or something like, when the crazies get weird, or something like that, they become pro. In other words, be careful, traders. Things are getting a little bit wackier, and I'm not sure how it's going to play out. We know our math more than likely will keep everybody safe. 8.5 out of 10 times it always does. So, all right, Doc from North America saying arrivederci. Classic liquidation creation. That makes sense. You know, if they want to force people from being short, they take it up so that they can get short. All right. This is Doc from North America saying aloha. Happy trails to you until we meet again. Happy trails to you. I'm a legend. I'm a figment of my own imagination, I think, Alan. I'm a figment of my own imagination. Happy trails to you, all my cyber trading friends. That's what it comes down to. It's the electronic trading pit.